In this short video, we're going to do a quick review of the 10 commandments of trading the momentum breakout system. Remember, the momentum breakout system is a strategy that attempts to play the major trend of the session. And so we're not concerned with every little wiggle that takes place. We're trying to position ourselves early on to catch the main directional bias for that day's trading. We focus on one main alert to try to get in and catch that main direction, but we can get 2 to 3 alerts if we've got a market that's shifting and reversing. We get into the grand slam home runs with this system because the system inherently tries to get us in and keep us in as long as possible. We take positions early on, and we're trying again ride the full directional movement of the session. We have jokingly referred to the momentum breakout system as the easy system because it's really easy to get started with it, implement it, and it's very easy on your nerves to follow this system if you don't overcomplicate it. And that's what the 10 commandments of trading, the momentum breakout system, is all about. It's a kind of a recap of how we want to think about following this system. Now remember, from within the software at any time you can click on the tutorial button, and that's going to take you to the knowledge base page where you're going to want to make sure you review all the pertinent documentation on how to follow the momentum breakout system. Right now when you click on that tutorial button, you're going to get to the knowledge base page, and you're going to notice right up at the top here it says Start Here. Getting started with the momentum breakout target system. That is a good one-page intro to how the system works and your various options and how to follow it and how you want to get started, our recommendations. So you definitely want to read that page. And this is the page here, Trading the Momentum Breakout Power Target System. Welcome to Power Emini Futures Trading. Yeah, you'll want to read that, and there's images in there, and there's lists of things that you want to focus on. And so make sure you read and study that page thoroughly. Again, the 10 commandments of following the momentum breakout system, which we're going to review today, is just another way of thinking about the concepts that you're going to find on this documentation page. Okay, let's dive right in and start talking about each of the commandments one by one. Let's start off with commandment number 1. Don't second guess the system. Follow it mechanically. What this means is don't come in each morning and look at all the different charts that maybe you look at and ask yourself, well, why is the system telling me to do this? That doesn't look right. Just assume that the system knows better than you and has built-in probabilities over the series. So when you get an alert, just mechanically take the alert. The algo is designed based on statistical probabilities of different market scenarios and follow through each of the sessions, and it's going to just work mechanically over the series. So you don't have to come in and try to figure out why it's doing what it's doing. Just follow the alerts. We will, for instance, have reversal days where we can sometimes get hooked into a false directional move early on in the session where the market quickly reverses. So we get hooked into a position, and that ends up with a full stop out, and then the system would give us a second alert, and so you want to just take that second alert because that could be the one that follows through and ends up hitting all of our targets and then ends up making up your stop out. So if you second guess the system, if you get fearful about following it and pulling the trigger, then you just kind of defeating the purpose. So you want to get in the habit of just trying to fly an instrument panel as much as possible. Play the numbers. Don't try to figure out what the market's doing. Commandment number 2, start off small and increase position size slowly over time. Yeah, we recommend you start off with the smallest unit possible. Start off with a one contract of the micro contracts and start following the system this way and gradually build over time. This will keep your upfront drawdowns to a minimum because, look, any system can do great during great market conditions and then run into rough patches for a short time, which are self-correcting. But over a very short period of time, we can have a little bit of a drawdown. And if you're just getting started and you, by dumb luck, you're getting started during that drawdown period, then things can get dicey if you're playing too aggressively with a live account right at the beginning. So we recommend that you start off extremely small with just one micro, and we've got a progression strategy that you'll want to follow to build up the position sizes. So keep it really small, and you will not have any big emotional disturbances trying to follow the system, right? If the positions are extremely small and almost meaningless and can't hurt you, then you'll continue to pull the trigger and you'll be able to let the system unfold and the probabilities play out over the series. Commandment number 3, forget the news. Turn off CNBC and focus on pure price action. Yeah, what this refers to basically is you trying to guess what the market's going to do based on what you think the news is going to be is what is called a fool's errand. Basically, you're not going to have any probabilistic advantage trying to play the news. So the best way to deal with the news is not even worry about it. Now, that being said, it doesn't mean that the news doesn't affect our trades and our positions and our profits. It does. This system excels because it gets us into market positions, logical positions on building momentum, and many times we see the news hit, a news catalyst, and that's like a 1-2 punch that creates, the big acceleration based off the technical setup. So by all means, we take advantage of the news by playing the system, and that's this harks back to the commandment number 1, following it mechanically. We can't guess when the news is going to hit and how the news is going to affect the market and to what extent. Can't do it. So trying to trade off of it is a losing battle. However, we take advantage of big news because we're already in a position that's going in our favor, right? And the news helps propel the market in our favor while we're already. So it's like being on a surfboard, riding a wave, and then a big tsunami comes right behind you and scoops you up and pushes you even faster. That is how you want to think about the news. So, if you enjoy watching TV, that's fine, but don't try to trade the system based off of what you think the news is going to be. Commandment number 4, don't fret your exact entry price. Use a market order after confirmation. What this refers to is that we're not doing super precise scalp trading where we're concerned about a tick or two here or there with our ATM setups and our targets. This is more planting a seed early on in the general direction of the market bias for the session as detected by the algo. And so we're not concerned about ticks here or there. So to keep it real simple, once you get the trade confirmation, which is a 1-minute close past the alert barrier, and the software confirms it in the notes section, you can just pull the trigger with a market order. Keep it simple. You're going to have days where the trade ends up being not the greatest entry. Maybe you're buying in at a little bit of an overbought area after the market order breaks out, and we end up getting a pullback, end up taking some drawdown. Yeah, that's fine. We see situations like that. On the other hand, there are runaway markets that if you don't pull the trigger quickly, you miss out and the market takes off without you. And then you're trying to chase the market. So in over the series of lots and lots of entries, all this stuff is going to average out. There'll be other trades when you pull the trigger, the market's moving down in your favor, and so you get a better fill, right? So it just don't fret each individual entry, just take the entry. And again, if you're starting off really small, you're not going to be emotionally involved in the minutia. Just take the entry, you're going to set your stop, set your target. Commandment number 5, don't fear your stopouts. Stops are a guaranteed part of this system. So as you follow this system, mechanically, you're going to incur stops. That's just the nature of the beast. The purpose of a stop is to prevent catastrophic loss. We don't want to stay in a position that's not working in our favor, and we don't want to give too much back if we're wrong. So the stop is basically saying, hey, we're wrong. The market didn't do mechanically what the follow through was anticipated. So we're exiting our position. We're taking a hit, but we're protecting our capital, and we're reset for a new entry, right? So stops are going to happen. Now again, if you start off extremely small, like we mentioned, and you pyramid up, you're never going to have a huge emotional attachment to the positions. You're just going to mechanically follow them. So get in the habit of not fearing the stop-outs, because the stop-outs get made up. The hallmark of any good system is that it's self-correcting. We can have very bad market conditions, dull market conditions sometimes, where it is possible to get hooked into two stop-outs in both directions, one session and two the next day, so on and so forth. And so we can incur some drawdown for a little bit, but then that quickly gets made back up. So the point here is just take your stops and move on to reset and get ready to take the next entry. Commandment number 6, focus on target 1 for the bulk of your exit. The system is designed to give us a 75% hit rate on target 1. However, this year we've been running an 83% hit rate, so we've got a better hit rate than the system is even designed for. The point is that is a very high probability target, so you want to start off focusing on target 1, and even as you build size, you can be pulling the bulk off at target 1. So for instance, let's say you got up to 4 contracts, then take half off at target 1. Let's say you got up to 5 contracts of the micros, take 3 off at target 1, so on and so forth. The documentation page spells out a couple different progression strategies for you in this regards. But just think target 1, high frequency, and work with that to get started. Commandment 7, concentrate on session results, not individual trade results. So again, think about this system. This is not a trade by trade by trade system. We're not trying to play the wiggles in the market. We're not trying to, scalp counter trend moves. Nothing like that. What we're trying to do is we're trying to ride out the full session. So the better way to think of this is that the end of each day would equate to one chess move in a chess game, right? So at the end of the week, you've had like 5 chess moves in there based on each session. Now, we may have multiple alerts and multiple entries per session, but get away from the trade by trade accounting. In other words, don't worry if you're, hitting a stop or the trailing stop gets hit, or we, take a small target and that's it. The job of the system is to keep us engaged in the market and get us to where we have higher probabilities, where we're the market's moving in our favor while we're engaged. And then naturally what happens is the markets rally based on technicals, based on news, and they can rally in our favor and we can catch the bigger moves, the bigger runs. So to follow this system, think end of day session. How did the system do? What was the net result? And then again, the weekly result. You want to think a little bit more of a macro time frame following this system. Commandment number 8. Track your trades and analyze your performance. When you get ready to start following this system in earnest, and even on sim and then in the live account and building your position sizes, track your trades methodically. Now, you don't have to go overboard and track every detail, but typically what you want to do is track the time of your entry, the direction, long or short, and the entry price, and then basically what happened. Did you hit a target? Did you get stopped out? And then maybe tabulate the net point gain or loss. That's all you need. That can be done in a notepad on your desk. That can be done in a spreadsheet, a basic spreadsheet, or that can just be done as a plain old text file or Word file. Just track your results. Now, following the momentum system, we're not trying to take too many entries. This is not a trade by trade system. Our main focus again is on the session results, so track your net point gains on each session. Now it's important to do this tracking so that you have a record of how you follow the system, and this can help you see and reinforce that following the system mechanically gives you the probabilities. It just works out in your favor. You'll be able to see that if you track your results. The other thing is that you can expose errors that you might make. You can see how maybe the system performed on a certain day and you didn't capture it correctly because you didn't execute correctly on a given day, and that can be reinforced in your notes. So very important, and again, keep it simple but do it. And in this vein, on this note, the evaluation of a system like the momentum system should be done out over several months. Now, that doesn't mean that it takes that long to be profitable. It's just that you can see a lot of exposure to the different market types that we get. Commandment number 9. Start on sim mode and trade off risk capital when you go live. What this refers to is that we recommend that your very first week, at least, you follow the system mechanically on sim mode. That way, capital is not involved, and so you can keep emotions out of the process, the learning curve. What you want to do is just get it adapted to basically how the system works, placing the orders, getting a feel for the follow-through, building a little bit of patience, because this is all about planting seeds early on in the session and then trying to let them germinate and the trades follow through in our favor and not watch the wiggles too much. So you have to develop a little bit of patience. But at least spend the first week on sim mode, and then when you do go live, we're highly recommended you start off extremely small, one micro contract that can be easily built up and pyramided over time. But again, you keep the emotions out of the picture and just continue to trade and follow the system mechanically, and that's how you're going to get the kind of results that we get. You have to follow the system. And so another thing you might want to do is trade off of risk capital when you start trading in your live account. Now, I got a great video on that down in the towards the bottom of the knowledge base page in the video training section, how to trade off risk capital and not destroy your account. So basically, it's real simple. Let's say you had a $5,000 account, send in an extra $500, that's your risk capital, and that can be allotted to following this system without fear. You can basically say, hey, look, I am going to just turn the system on, start mechanically following it. I have $500 to burn through to get this system off the ground. And even if it doesn't work for whatever reason, for me, I got my 5,000 original capital sitting there. I didn't destroy my account. Right? That's how you trade off of risk capital. Risk capital is just a way to get the plane off the runway without crashing. You don't want to eat down into your original starting capital. Just trade off of additional risk capital. So watch that video and you'll get that part of the commandment. And finally, commandment number 10, don't quit following the system once you start it. Now, of course, there's an exception to every rule. Obviously, if you had to get transferred for your business for a period of time and you're not able to be at a computer, that's, obviously that's an exception to the rule. Or you have to take time out due to illness, or you have a surgery or something like that, or taking a vacation. Obviously, we have those types of exceptions. What this more refers to is you don't want to get gun shy early on and stop pulling the trigger. The system is designed to work based on the probabilities and the statistics over the series, which means that even the rough patches that we get, they self-correct, right? And they get made up for. If at any point you go into a drawdown but you stop pulling the trigger, all you're doing is just locking in those losses and you're not allowing the system to make them back up for you. So you have to become committed to following the system. Again, that's why it's so important to start off on sim so you can see what the system does and how it follows through in different market types. Then with extremely small one contract micro positions to build up size over the series non-emotionally. Keep the emotions out of the picture and follow mechanically. And you're going to find that if you don't second guess the system, this goes back to commandment number 1, just follow the system mechanically. The probabilities work in our favor, right? And the system will self-correct and will make those points that you're trying to make. We have many times where we could have a stop out or 2 stop outs in a row, and then it could be difficult to pull the trigger on the next trade, but you have to just go ahead and force yourself to do it. Take the trade. It works out over the series in the end. So those are the 10 commandments that if you just follow those and keep those in mind, they're going to help keep you kind of focused on how this system works and keep you in the game so that the system can profit for you.